Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is August 23rd, 2015. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. U.S. market has entered a correction phase. All the indices broke major support. My current trade, all my long positions was stopped out last week automatically. Most of them were stopped out on Wednesday, on Thursday, and I avoided the bloodbath on Friday. I have shorted a few indices through the ETF, but I closed them all on Friday, just took the money off the table. I currently mostly stay in cash with a very small position open in gold and some short ETF. Let's take a look at the market indices and the charts. Okay, first is okay. Let's take a look at those are the major indices. First is a German DAX index. German DAX index broke support. This is a 200-day moving average. It broke support on Wednesday already. So Thursday, Friday, just keep on going down. NASDAQ, oh, this is a monthly chart, long-term monthly chart. NASDAQ, as you see, reached a peak on year 2000 and then came down. First, it broke the 12-month moving average and then rebound and then continue slide down for about 2 years before it hits the bottom. And it fell from a 5,000 point to 1,000 point. So that's a crash, basically a bear market. And then it came back up and then came down again on 2008. It cut in half, more than half. And then on 2008, 2009, it hits the bottom. Market has been in a bull market since 2009. This is like a 6 years bull market. It had some deep correction, so it broke 12 months moving average, which is annual moving average, a few times, but it went back up in the next few months. This time it broke this 12 months moving average again, but is this time gonna be a brief pullback like before, just went back, or is gonna be beginning of bear market like year 2000 or year 2008. Only time can tell. There's no fortune telling in the market. I have no idea what's gonna do, but the discipline is, if the market break major support, we should stay out. Let market sort it out itself and see when they go up or when they just continue go down. If the market bounce back up, we can buy again. If the market continue go down, we just stay out. Stay out all the long positions. NASDAQ weekly chart, as you see, weekly chart broke 40-week moving average here and break a 10-week moving average, which is a yellow line, and 40-week moving average. NASDAQ daily chart, it had been under 50-day moving average, and last week broke 200-day moving average, and this is a major break. On Thursday, broke 4,900 point. That is a major break. And Friday, it just everybody decided to get out of the market. So in short term, because of magnificent of the pullback on Friday and the high volume, in short term, maybe we have reached the oversold condition. The rebound is possible. However, it's not the time to buy. Usually when market rebound like this, and they can just continue go down again after it rebound a little bit. So it's a time to continue staying cash, or if you know how to short after the market rebound, may short a little bit. Mid cap also broke 200-day moving average. Small cap broke. Small cap has already been under 200-day moving average for a while. SP 500 large cap broke 200-day moving average with a huge volume. Gold, I'm showing you the gold long-term chart. Gold This is a gold price monthly chart since 1980s. As you see, gold had been on a long-term downtrend. This is the gray line here is a 12-month moving average. So gold is under 12 months moving average. However, you look at the gold weekly chart, looks like it went back up a little bit. Look at gold daily chart. Gold had rebound above 50-day moving average. From long-term trend, gold is still in a downtrend, but it looks like it tried to go back up. So short-term gold has entered an uptrend because it has already rebound from the downtrend line and pull back and bounce back again. So short-term trade, gold should be traded on the long side, but the long-term trade, it needs still to be very cautious. It takes time for the long-term trend to reverse. Silver, downtrend. Gold mining stock, very similar. Short term, it may have entered a reverse, but the long term is still in the downtrend. This is a GLD, is a gold ETF. It's tied with the gold. PPLT is a physical platinum ETF. Platinum is also tied with the gold. Silver ETF, downtrend. All of those precious metal ETF, platinum, gold, silver, they all still in the long-term downtrend, but the short-term looks like they're started working, try to go back up. So that's something I'm closely keep an eye to watch right now, because if the gold reverse the long-term downtrend, go to the long-term uptrend, that's going to be very significant. So that's something I'm watching right now. US dollar broke major support. Crude oil continue to stay in a downtrend. This is a very steady downtrend. There's no hope here right now, as the index crude oil price remain below 10-day moving average. It's just a completely downtrend. ERY is an inverse 3 times a bearish energy ETF, so it's tied with the energy index 3 times, and now it's bouncing back up pretty big last week. USO is a crude oil ETF downtrend. XLE is energy sector ETF. As you see, the ERY is a 3 times inverse of the XLE. So XLE go down, ERY goes up. So this is the XLE, come down. It dropped pretty hard. China, Shanghai Stock Exchange Index monthly chart. As I shared with you before, China market in the history had a big run up and big come down. When it crashed, it usually lasts for a year. Right now, we are on the 3rd month of the crash. So, and weekly chart of China index, and right now it's just reached the rebound point, and then it just come down. So daily chart, and daily chart has a lot of story to tell here. You look at the China index, when it came down from 5,000 point to 3,000 point, around the 3,300 or 3,500 point, around this area, you see a lot of reversal. That means there large amount of money coming into the market to save the day, to save the market. They buy up the stocks, push the index up. However, as the index reached 4,000 point, there's no continuation of that investment to pull the market back to the uptrend. So from there, it tells a lot of story. Probably government and pulling money to save the market as it as it trade around the 3,300 or 3,500 point, and that range government is buying, but government has no interest to push the market beyond 4,000 point. So, and the 4,000 point, there's a lot of sellers waiting there. As soon as it reached 4,000 point area, the sellers will come in to sell them. So China market, from the technical analysis point of view, is still within a trading range until it break below 3,300. Then it can resume a downtrend, or it can go above 4,000 point, then it can resume its previous this uptrend. So we don't know where it's gonna go right now, but I intend to think it has a potential to go down, but we don't really know for sure right now. So we just wait and see. YING, last week I traded this ETF. I bought it somewhere around this area when they broke $94.60. I bought it, and then in 3 days it has a big run up, so I sold it on Friday, so took the profit because I really don't know what's gonna do on Monday, and China market opens 12 hours ahead of us, and if they open high on Monday, somehow government does something on the weekend, they can open high on Monday, then when we open, we can, this YANG can gap down, so there's a risk to be taken when you trade a overseas market, and there's a risk, there's a gap down or gap up. So that's the reason I got out of YANG. But I don't think China market is anytime soon to resume last year's uptrend. But when you short the market, it's better to take a short-term profit because market can rebound pretty quick as well. And IYR is a real estate, came down. All the index came down. Copper price come down, downtrend. NBB is the real estate mortgage bond price, and right now it's an uptrend. Bond, the mortgage interest rate is coming down. Semiconductor index came down, and this is a very deep downtrend. Social media index, stock index come down. The solar index come down. Financial ETF, this is the most significant ETF to watch for because the market tend to follow where financial index goes. So if the financial stocks are going down, the market tend to follow to the downside as well. So this financial index ETF right now broke 200-day moving average. That's bad news for the market. Okay, I like to show, okay, wait a second. Let me show a few things. Okay, from today, I'm gonna change the format a little bit and to share with you all the closed trades for the week. Those are the stocks I sold, the positions I closed, and then I'm gonna show you the trades that I'm still open. I still have an open position, and then I'm gonna show you another list, which is third list, is a trade setup. It means those are potential trades I might take in the coming week. So let's see. First of all, it's the first list is a closed trades. Those are stocks I sold last week. CTSH, I sold it right here on Thursday as it broke down the little flat base. That's a automatic stop. I always have a stop order. Whatever stock I buy, I immediately put stop order. I just decided this is a stop from the chart. This is a support. If the stock break this if the stock break this support, and then there's no hope for it to go up. I mean, you have to assume the probability of continue going down is higher than they reach break the support and go back up. So. Lenal, LEN, stop out right here. Actually, this one stop out on Friday. This is one of the two stocks stop out on Friday. Most stocks get stopped out on Wednesday or Thursday. Mobile Eye gets stopped out right here. I bought it right here, and only 2 days later it gets stopped out. MLM stopped out right here. SOXS. Oh, I was shorting semiconductor index. I bought SOXS, which is a 3 times of the inverse of semiconductor index ETF. But this trade, I got out too early. I bought somewhere around this area, but I sold on Wednesday. Well, didn't know that Thursday and Friday that's a big run up, but that's a lesson to learn. If the short position reach the upper bound of this trend line, it doesn't mean you have to sell because it might be a panic sell and then push the bearish ETF upward pretty quick. This is a very quick gain, a lot of gain being left on the table. So that's a lesson for me to learn. ULTA, I broke the support. I sold it. This gets stopped out on Thursday. I had a very tight stop, which is a 10-day moving average. So YANG, this one I traded pretty good. I bought it as soon as it reaches 96.6, 94.6. That's an indication. And that day it's around like $95. It broke above previous resistance. So that's an indication I should get in. So I got in 3 days later and it went up a lot. So I took a profit and got out. And second list are the stocks I still have open position. ERY is energy sector ETF, bearish, 3 times tied with the energy sector. I bought it right here and still open. Probably now I'm looking at it, maybe I should have sold it on Friday, but I don't know. Maybe on Monday I'll just sell it. We shall see how the market open on Monday. GDX. GDX is interesting. This gold mining stock ETF has been in a downtrend for a long time. Now it bounced back up and pretty quick, and then pull back and now go back up again. So if something pull back and go back up, that's a signal I should get in. So I bought it a little bit on Thursday, a little bit on Friday. So I'm waiting to see what it's gonna do. If it break down $14.36, that's a signal I should get out. That's a stop price. It should not break previous support. But if it doesn't break previous support, and it has a chance to go back up. And UGT is the same thing, it's 3 times of GDX. So this is for more aggressive traders. This is potential future trades. I'm looking to buy more GDX. I'm also looking to buy GLD, which is a gold ETF. If it has a chance to pull back, I may buy GLD. PPLT is also another thing on my watch list. If it can pull back to $96, $97 per share, maybe I will buy. SOXS, I have current position, but if this thing came down, I may just buy some more, because this semiconductor index seems to be in a downtrend. And if the bearish ETF came down, I may buy some more, add on to existing position. But if it doesn't, if it just jump back up, and I may take profit. YANG is another short the China market. Is another bearish ETF, and I don't have any position right now. If China market rebound, YANG should pull back. I may look to buy it. So that's all. What to do in the current market? First thing is control the position size. During the bear market or the market downtrend phase, and volatility is very high. So if you're wrong, you can lose a lot of money. So trade light is the most important thing. And right now my position size is around 20%. I should not trade more than 40%. So for the money in my account, I should use less than 40% in trade. Another 60% should stay in cash. And if the market rebound, I may short the market through the bearish ETF, and I look to buy more gold and gold related ETF. I already have a little bit, but not enough. If the gold trend reverse, I would like to be on it. That's all for this week. See you next week.